rising wedge that we've been in over the last 6 or 7 weeks has turned into, the rectangle we just showed on the other chart. We're about to see the 20-day exponential actually catch up with the market. We sort of saw the same thing happen back in April and in June. We just had the market stall out and let the 20-day exponential play catch up. So right now we're looking at support of 91.45 on the Dow. 91.45 to 9200 is support. We got our negative MACD cross on Friday, so we'll be keeping an eye on that. But stochastics was able to bounce off or back up through 80. So again, we've got a couple of weeks left in before we've got the Labor Day vacation. Volumes are going to continue to remain very low in the market. So it's anyone's guess where they can bounce us around to. Late Friday pretty much showed you how easy it is for them to move the market just based on a handful of stocks. This week we don't have a whole lot of earnings report. We do have some big retailers reporting earnings on Tuesday, Target, etc. And the consumer was the reason we did see that sell off this week. Well, sell off, trade back to the flat line. We had positive statements from the Fed, but then we had consumer confidence and retail sales come in lower than expected. So, we still have some tailwinds there, but we continue to have the shorts being squeezed, and we continue to have fund managers trying to chase performance. All those fund managers who've been sitting on cash since March, and all those fund managers who've been short from this, almost 3,000 point rally we've seen from the March lows, they're way behind in the market and finding themselves being forced to chase stocks no matter how much they're up or how silly it sounds. But anyway, let's jump into stock plays. OCLR, this is my favorite play going into this week. We've played this cash-rich tech stock many times, and as you know, we've been rebuffed by resistance at the 70-cent area. But as you can see here, I've got these lines here. This is what's called an ascending triangle. And essentially what it is you see this little triangle here? An ascending triangle is 3 triangles. It's typically a very, very bullish formation. It's one of my favorite technical indicators, has been for years. Whenever you see a breakout, an ascending triangle breakout, it tends to be very, very nice and very, very fast to the upside. And what happens is you've got 2 triangles, resistance, same spot. Right now we're looking at 70 cents, support around the same area, 55 cents. And then the third triangle, which is what we're in right now, this is the breakout triangle, and this usually sees the stock go boom. Target on the breakout is at least a move to 85 cents. And the way we get that is we take the triangle low and the triangle high. So that's 55 cents and 70 cents. The difference is 15 cents. You add it to the breakout level of 70 cents and you get a measured target of at least 85 cents. Typically they tend to go more, but we're conservative in our calls, and we've been looking for a move to the 85 to 90 cent plus area over the last 6 weeks, waiting for this stock to break out. I think it goes big, and I think it goes big this week. We've got RSI breaking up through 50, positive ADX cross, stochastics looking very nice, and on balance volume is slowly starting to tread higher. I suspect we're going to see this one go zoom boom this week. So all eyes on OCLR this week. Would look to add this one, and actually we did pick some up on Friday at 64 cents. Would add this one on weakness, and then look to add even more on a breakout over 70 cents. Here we have the chart of Sirius. We've played this many, many times before. Chart has turned very bullish again. What started this spike up this week was S&P upgrading Sirius's debt. Chart looks very, very nice here. All the indicators are strong. RSI, MACD, ADX. You can see on balance volume, stochastics bouncing off an uptrend line. But let's take a look at a 1-year chart here. 1-year chart is very, very bullish. What you see right here is a cup and handle formation on the 1 year. We've got a nice big cup here. You can see it. This is the cup. This is the handle. The handle is about ready to break out. And over the medium term, meaning the next 6 to 9 months, there is no reason why this stock can't go to $1.50 plus. But right now we're just looking for a break over 60. Over 60, there is really no resistance until we get to the 90 cent area. So be watching Sirius very closely this week. A break over 60 should set this one free. ULU, this was a play on the penny, micro penny mania that we saw last week. Big spike on Friday or on Thursday. Friday, the stock kind of eased off into its earnings report, which came out in after hours. Target here is a move to the 25 cent area, which stops at 15 cents. NEXM, this is that biotech that we've been waiting to break out for the longest time. Stock was down a little bit on Friday. They reported that NASDAQ has given them a 2-week notice regarding their market value. $2.5 million is needed to be listed. Company said they're going to submit a plan because they're in talks with other companies regarding a partnership. I know some guys in the chat room were saying that the company only got 2 weeks notice from the NASDAQ, and that should be viewed as bearish. But if you go back to March when they got the same kind of letter, this is not uncommon for market cap issues with NASDAQ. They usually only give 2 to 3 weeks notice in order just to get companies to speed up the plan. I would expect NEXM to give their plan and NASDAQ to do an extension. They're not in the habit of delisting stocks these days because, they get money from the companies that are listed, and they're going to do their best that they can to keep them listed. Anyway, you can see the chart is still holding support, and we're waiting for close right now. Over 20 is the breakout on this, so waiting for a breakout of 20, and target is 28 to 30 cents. ASUR, this was a trading alert on Friday. Really like the setup on this stock. Cash-rich tech stock that has a viable business. There are but a handful of stocks like this under 30 cents right now. These guys have a hedge fund that is a large shareholder that is fighting management, the moron management that's in place. There's a shareholders meeting in a couple of weeks where the activist fund manager is going to grab a bunch of seats on the board, and this should be very positive for the stock over the next couple of weeks. Would be looking to add this one anywhere in the 17 to 19 cent area with a target of 28 to 30 cents. We've got RSI breaking up through 50, strong ADX, strong MACD, strong stochastics, and you can see unbalanced volume. Buyers have really started coming in here over the last couple of weeks, and we should start to see that reflected in the stock price, and it should be a very nice up week in this stock this week. Back with the penny cap Momo again. We've got Castle Brands, ROX, liquor distributor. Earnings were out again on Friday. Decent enough earnings. Company's very viable. As you can see, it's been caught in this trading range of 21 to 28 cents, essentially for the last 18 months. Again, very few stocks that have a viable business plan continue to trade down in this level, and if this market continues to do what it's doing, stocks like this are going to go boom. It's just a matter of time. Sit and being patient. Here you can see a 1-year chart on this stock. Really tight trading range, and what we're going to see this stock do sooner rather than later is go boom. So it pays to have at least a small position in this one, waiting for that to happen. Last but not least, we've got ASTM. We got a nice 50% pop out of this one a week ago. Stock has retraced back to its uptrend line. We should see strong support hold here in the 41 to 43 cent area, and target is a bounce back to 48 to 50 cents in the next few days. So that's it for the video this week. Market could go either way. We could essentially see more of the same. If we continue to see this chop back and forth, it's perfect for the small caps and the micro caps. And as we've mentioned over the last few days, we're raising our cash level, but we're a little hesitant to go short here just because this has been a bend the shorts over market. We'll see what happens on a break at 9,200, but things look pretty decent here. We've got some very nice plays going into this week, especially OCLR and ASUR, which I think could be some very nice winners for us. That's it for the video. See you guys in the chat room tomorrow. Good night.